So if you go back 15 years ago and you find out that she was a dental assistant, let's just say, and the dentist verifies that from 15 years ago, that works, correct?
Yeah, as long as you can get it verified.
So if you were going to sum it up, Richie, and the real estate agent has a borrower that went to pre-approval and they went to their favorite lender or whatever, and the lender says no, what should they do?
They should call another lender. They should call another loan officer. And I know we're going to wrap up mine.
What kind of questions should they ask when they call?
When their customer gets told no at a lender, they should call that loan officer and say, why did they get told no? They're going to explain something, and then just ask them, is it the actual rule book from the FHA or VA, or is that your overlay? And as soon as the real estate agent uses the word overlay, most loan officers go, how did you know that word?
True. Yeah. And if they don't know, then they still should go to, they call providers, just ask us. We'll give free information. If you're not sure, call our number 262-754-4444 and just ask the question, and we'll tell you if it's a rule or not. Whether you send us the deal or not, we just want to help. We want to be givers. We want to invest in our referral partners, whether we're getting the loans or not. So,
and one more real quick, James, that doesn't have to do with saying no to a customer. An overlay that has affected people even when they got a yes from a lender is debt to income ratio. I've taken several calls where they were approved someplace for $200,000. But where they want to buy, it's just not buying them a house. And so they ended up calling, and I explained to them overlays and max debt to income ratio, and all of a sudden I'm approving them for $300,000 because that lender had an overlay to how much of a person's income can be used to pay for a mortgage and debts in life. And again, the VA will shock you. The VA, I've done one at 70-some%.
On a VA loan?
On a VA loan. And, that just approves somebody for more house that way. And it's a very key element that realtors need to understand.
In the next couple of months, we're going to do a whole segment just on VA home loans. You're not going to want to miss it, everybody. The myths around the VA home loan, I'm going to shatter those myths, but we'll talk about that next time. All right?
Sounds good.
All right, Richie. Thank you for sharing.
But now it's time to ask you some questions.
Go for it. Yeah.
So we talked about this overlay. So now let's talk. We want to ask you, James, because you've structured our company as a certain type of business, and we want to explain to the real estate agents. You may generically use the word lender, but there's really different types of lenders and what they do. Like I've written down the main ones I think of are: there's a bank, there's a credit union, there's a broker, there's a non-delegated lender, and there's the delegated type lenders. Would you add any categories to those before we explain them?
No, those are the categories, or those are more, I would say we've got your traditional lending institution, bank, credit union. You've got your retail lending institution, which would be what we call a delegated or captive lender. To use an insurance example, would be like a State Farm Insurance or an American Family Insurance. That'd be a captive insurance agent. So that would be your retail companies out there that they don't have depository accounts like a credit union or a bank. They're a mortgage banker, but they are a delegated version of that or a retail version of that where it's just they're captive.